Yeah, good afternoon. Today we're still looking at the DXY. Last week I was tracking the performance of DXY, and I talked about a few things. I talked about the four price phases that I analyzed and I implemented on the DXY. So basically today it's just a matter of tracking whatever I talked about. Yeah, because we saw that DXY has been having what we call a bullish, a bullish, a bullish what? A bullish move. You could see the momentum. It was having actually it was such a strong one, and it was a bullish momentum. So on daily, for a day trader on daily, most of the time we could use weekly or daily to find out to track the direction bias of a given pair. So that's why on daily, for me, I normally use daily time frame to track the direction bias, uh, and also the market structure basically on a higher time frame. Yeah, you could see that I marked the break of structures. Yeah, when the price continued to make series of higher highs and higher lows, higher highs and higher lows. So we had what we call the break of structures. Yeah, forming what we call the corrective wave and the impulsive wave. So whatever you see here, whenever the market breaks structure, it's the impulsive waves actually which does that, which breaks structure. And wherever the market retraces, yeah, then that's the corrective wave. So we talked about, let me go to 4 hour, the four price phases. So we were here and we talked about the phase of the first phase, which was our consolidation. So this was our first phase, yeah, whereby we saw the market actually trending within uh, a rectangular block. So this kind of consolidation, it happens when the market decides to trade sideways. And you know what happens wherever the market starts to trade sideways, it keeps building up what we call the external liquidity, external range liquidity. So this could be on the upper resistance could be the buy side, and the lower one support could be the sell side liquidity build. So since we talked about the four phases of the market, the price, so we expected to talk about the expansion phase, the retracement phase, and the reversal phase. So I'll be deleting this block. Maybe I'm gonna be changing the color to make it a little bit dim. Let me make it this pink. Yeah. So it's easy. It's clear enough to see. It's clear enough to see. So the four phases we see this is the consolidation phase, the accumulation phase. You know what happens. I've talked about it. Here we had what we call the external liquidity, that's buy side liquidity. As price broke above, we saw what we call the expansion phase. So expansion phase, still the trend was prevailing, making series of higher highs and higher lows, higher highs, higher lows. All these were break of structures. Yeah, these were break of structures, the internal structures, because these ones were plotted on 4 hour time frame. Yes, this BOS. So basically, this swing, the one I marked XB, is the swing I marked on daily. This is the major swing, the major break of structure which was caused. So the major swing is what actually I was looking at. Yeah, this is actually our trading range. This swing, this impulsive swing. So since I talked about the four phases of the market of the price, so we expected to see the expansion phase when we saw price breaking out of the consolidation phase, and we saw again series of higher highs and higher lows. So basically it came to a point that price couldn't make a new higher high here. So failure to make a new higher high here is actually price failed to take out trade to take out this previous swing high, this higher high, but eventually it decided to take out the low, this previous swing low, which was what we call a what, a higher low. Yeah, so meaning that this demand area that we see, it wasn't strong enough to keep pushing, to hold price, to keep pushing it upside. So there was an order block here. So this order block got invalidated. That's when we saw a break of market structure to the downside. So it showed us the intent of the trend change. As you could see, there was a break of market structure. Yeah, as it broke also the previous higher low. So it showed us the intent of a trend reversal, and that trend reversal actually happened on the mid time frame. It's not actually breaking the major swing, which is X. Understand, we still actually bullish, but this is just the internal structure on the lower time frame. So that's why we can see the minor break of structure. All these are minor break of structure. As you see, we continue to come to run bearish. As you could see, couple of break of structure on the bearish side. And another thing, so this all phase, which we're looking at, is this. Now this is the what, the retracement phase. Yeah, because we talked about the accumulation, expansion, breaking out of the range, and we're talking about this short-term trend reversal, which is a retracement. So we could see the order block, which caused the entire expansion move. This is the order block. Before the price expanded or broke out above, we had an order block which caused the entire expansion move. So as price expands, wherever price breaks out, we talked about that price leaves what we call the imbalance behind, the liquidity void, which we saw here. So the expansion actually was meant to be filling up the liquidity void, the imbalance which was left behind by the expansion. And precisely, I'm expecting price to tap these areas of demand. Yes, because if you're looking at this swing, this is the daily swing. Actually, this is the main swing that I'm looking at. Yeah, if I could put the Fibonacci on that main swing, then you could see we could only take buys under discounted levels below 50%. So basically, this is what we're seeing. So you could see prices even below 50% is the equilibrium level. So it's approaching much lower levels of what demand. So that's what I'm expecting. I'm expecting price to tap this order block before it reverses. So I'll be expecting a reversal. Yeah, yeah, to continue with the prevailing trend. So basically, it's all about knowing uh, areas where we could buy, areas where we could sell from. So basically, we always have what we call premium areas and discounted areas. So these are areas of selling and areas of buying. So like I placed a Fibonacci. So basically you could see that, yeah, price is already within the discounted areas. We just want to look for a valid order block where we could now start buying from. But before buying, still we need confirmations on lower time frames. So I'm hoping for a tap on this order block. Then afterwards, price will literally continue to do what? To reverse. Yes. Once it taps, then we shall get some kind of confirmation on lower time frame. Then we shall be